Welcome to The Explainer. Today we're unpacking something far, far beyond your standard dry corporate earnings report. What we're actually looking at is a highly dynamic, unfolding story of transformation. Nokia's Q2 2026 financial results are officially in, and man, they paint a vivid picture of a legacy telecom giant that is rapidly and successfully evolving into a true AI-driven enterprise. Now, if you've been following the telecom space for any amount of time, you know exactly how hard it is to pivot a massive ship like Nokia. But as we're about to see today, they aren't just turning the ship, they're literally strapping a rocket engine to it.
Right out of the gate, before we even get into the technological weeds, I really want to deliver the bottom line up front. 105%. That is the massive year-over-year surge in Nokia's AI and cloud net sales just in the second quarter. Let that sink in for a second. In an industry that is so often defined by, single-digit incremental gains, a 105% leap is an absolute earthquake. It immediately tells us that Nokia's grand strategic pivot isn't just some whiteboard vision, it's translating directly into incredible real-world market demand.
Okay, let's dive right into this. Here is our roadmap for the explainer. First, the AI and cloud boom. Second, the AI RAN revolution. Third, strategic focus and partnerships. And finally, we'll wrap up with a Q2 financial breakdown.
Starting off with Section 1, the AI and cloud boom. To really grasp the sheer scale of what Nokia is pulling off right now, consider this. They just secured a staggering €2.8 billion order intake. So why does that matter to you? Well, a 105% sales jump in a single quarter is fantastic, sure, but this massive order intake, that proves this growth is backed by sustained customer commitment extending well into the future. It's a clear signal of accelerating momentum. Customers aren't just dipping their toes in the water with Nokia's new tech. They are diving in headfirst and locking in multi-billion euro contracts.
Moving right along to Section 2, the AI RAN revolution.
So you might be wondering, how exactly did Nokia achieve this? Well, AI RAN, or Artificial Intelligence Radio Access Network, is the technological engine humming under the hood here. Let's logically walk through its 5 core tenets to understand why it's such a massive game changer. Step 1. It offers twice the network capacity from the spectrum operators already own. That is instant ROI, plain and simple. Step 2, and honestly this one is revolutionary. The network now evolves at software speed, not silicon speed. This means operators can push updates dynamically without needing those expensive, disruptive forklift hardware replacements. Step 3. It's open, it's programmable, and entirely ready for the AI era. Step 4. It gives operators 3 distinct deployment paths on one unified platform, which ensures everyone gets to the exact same 6G destination regardless of where they're starting from today. And finally, Step 5, it provides a giant leap in total cost of ownership and power efficiency, and get this, all at absolutely no hardware premium.
The crucial point here is summed up beautifully by a quote directly from their Q2 presentation. Not incremental outcomes, but transformational economics. Nokia isn't just out there selling their customers a slightly better router or, a slightly faster antenna. They are fundamentally changing the financial viability of running telecom infrastructure. By eliminating the need for constant hardware replacements and doubling that spectrum capacity, they're completely rewriting the economic physics of the entire industry.
That brings us to Section 3, strategic focus and partnerships.
Now, no company transforms an entire global industry in total isolation, right? Nokia is actively embedding its technology with some of the biggest players on Earth. Take Google Cloud, for example. They're co-innovating to build AI agents using Gemini for autonomous network operations, which translates to faster issue resolution and significantly lower costs. Over at Vodafone Albania, they're deploying AI-powered network slicing. That's where agentic AI dynamically optimizes network resources, which is a huge step toward networks that can completely manage themselves. Add in the expansion of Indosat's 5G network to unlock new AI services, plus these first-of-their-kind trials bringing passive optical tech right inside the data centers of major U.S. hyperscalers, it is, frankly, a masterclass in strategic alignment.
But here's the thing. To fund this kind of future, you kind of have to let go of the past. Nokia's recent capital moves reveal a really stark contrast. On the divesting side of the house, they are shedding legacy baggage by selling off their fixed wireless access CPE business to Inseego, which sharply simplifies their portfolio. But then, look at where they're aggressively funneling that capital. They are expanding their advanced test and packaging capacity tenfold in Pennsylvania. They're standing up a brand new Fab 2 optical manufacturing site in San Jose that's set to begin production by year-end. And they've just agreed to acquire NXP's Chandler Semiconductor site. They're meticulously building out this immense, highly capable optical manufacturing footprint right here in the US so they can entirely own the supply chain for this new era. And finally, Section 4, the Q2 financial breakdown.
At the end of the day, the numbers always have to add up. When we look at the aggregate financial reality of Nokia's Q2 performance, we're seeing a very healthy 4.8 billion euros in net sales. That marks a solid 9% year-over-year growth on a constant currency basis. But what you really want to pay attention to here is the profitability. They managed a 70 basis point expansion in comparable gross margin, bringing that up to 46.0%. And they matched that exact same success with another 70 basis point expansion in comparable operating margin, hitting 9.0%. Now, while free cash flow did dip to a negative 0.7 billion euros for the quarter, this robust expansion in both margins and top-line sales proves that the underlying business engine is operating with some serious leverage and efficiency right now.
Let's break down the network infrastructure sales and see how everything connects back to those strategies we were just talking about. When you look at these segments, the through line becomes so obvious. There is an incredible 20% year-over-year jump in optical networks alone, bringing in 868 million euros. IP networks are also up a phenomenal 16%, right alongside a solid 7% bump in radio networks. That massive 20% leap in optical, that is the direct, real-time validation of their aggressive manufacturing investments in Pennsylvania, San Jose, and Chandler. They essentially built the advanced capacity precisely where the market was heading, and that demand is already showing up in a huge way in their revenue breakdown. All of this leaves us with a truly fascinating perspective on exactly where this company goes next. Nokia's leadership specifically went on the record to say they expect a meaningful increase in momentum as we head into Q4. So looking at that initial 105% surge in AI and cloud, the transformational economics of their AI RAN platform, and those massive US manufacturing investments, you have to ask, is Nokia's AI strategy just getting started? It certainly looks like this incredible corporate turnaround might just be in its opening act. Thanks so much for joining me for this explainer. Keep learning, keep seeking out the structure and the noise, and I'll catch you on the next one.